Ladies and gentlemen, good day and welcome to Zim Laboratories Limited Q2 and H1 FY25 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Sharma from Go India Advisors. Thank you, and over to you, Ms. Sharma.
Thank you, Neerav. Good afternoon, everyone, and welcome to the Q2 and H1 FY25 earnings call of Zim Laboratories Limited. We have on the call Dr. Anwar Daud, Chairman and Managing Director, Mr. Zulfikar Kamal, Director Finance, Mr. Shyam Mohan Petro, Chief Financial Officer, and Mr. Zain Daud, Investor Relations. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that company may face. May I now request the management to take us through the financials and the business outlook, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Deepika. This is Anwar Daud speaking, and a warm welcome to everyone joining us for Zim Laboratories Limited's Q2 and H1 FY25 earnings conference call. I trust you had the chance to review the financial results and earnings presentation available on the exchange. Our performance in the first half of financial year 25 reflects our focus on executing our core strategy and our progress towards achieving our financial and filing goals. In Q2 FY25, Zim achieved a total operating income of 922 million, reflecting a 7.4 year-on-year growth. Our EBITDA and PAT margins stood at 11.8 and 2.6 respectively. For the first half of 25, we recorded total revenue of 1740 million with EBITDA and PAT margins at 11.4 and 1.9 respectively. The pharmaceutical business remained our primary revenue driver, contributing 69% of total revenue. This was complemented by the nutraceuticals division, which contributed 31% in H1 financial year 25. Exports continued to be a significant growth driver, contributing 84% of our total revenue in H1 FY25, amounting to 1467 million rupees compared to 79.4% in the same period last year. NIP revenues reached 271 million in H1 financial year 25 with 119 million in Q2 FY25. Notably, the OTF segment grew its revenue share, reaching 4.9% in Q2 FY25 and contributing rupees 45 million. Total OTF revenue for H1 FY25 stood at 71 million. Our NIP and OTF segments, including licensing fee, collectively contributed 21.6% of total revenue in H1 FY25, which is up from 14% in H1 FY24. On the R&D front, we invested 9.7% of revenue in H1 FY25, up from 8.7% in the previous period. We are targeting the completion of our initial line of 10 NIPs, including bioequivalent studies and registrations for multiple developed markets. We also continue to invest in our OTF products and in upgrading our dossier for entry into new markets. In the first half of FY25, we completed 7 NIP filings in the EU and 1 NIP filing in Australia, aligning with our product filing strategy. Additionally, we completed 1 OTF filing in Australia and 1 in the EU. We also received our first EU marketing authorization for our azithromycin oral suspension under the NIP category, and we have commenced our commercialization efforts. I now hand over the call to our CFO, Mr. Shyam Mohan Petro, who will provide a detailed overview of our financial performance. Mr. Petro, over to you.
Thank you, Dr. Daud, and good afternoon to all. To begin with, let me walk through our financial results for Q2 and H1 FY25. For Q2 FY25, we reported a total operating income of 922 million rupees, reflecting a 12.7% growth on a quarter-to-quarter basis and 7.4% growth on year-to-year basis. EBITDA for the quarter reached at 109 million, representing a 21.1% increase from the previous quarter with a margin of 11.8%. PAT for Q2 FY25 was at 24 million rupees with a margin of 2.6%, showing a strong quarter-on-quarter growth. For the first half of the FY25, total operating income was 1,740 million rupees. Our EBITDA for H1 FY25 reached at 199 million rupees, resulting a margin of 11.4%. The PAT margin for H1 FY25 decreased to 1.9% owing to increased depreciation in finance cost. Our balance sheet front, our borrowing stood at rupees 974 million as of H1 25 with a gearing ratio of 40%. Our capital expenditure for FY25 remains in line with our strategy, focusing on completing the key projects like the NIP Urology Suite and capacity expansion for key nutraceutical and OTC products. That concludes my update. We can now open the floor for query. Thank you.
Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Aryan Oswal from Finterest Capital. Please go ahead.
Hello. Yes, sir. Am I audible?
Yes.
Yes, you are.
Yes, sir. Good afternoon, sir. Thank you for taking my question. Sir, can you provide insights into the working capital cycle and cash conversion cycle for H1 FY25? And are there any plans to optimize working capital to improve cash flow?
The cycle is healthy at the moment. For the H1, we have quite improved from FY24, and the healthy trend will continue.
Okay. And sir, with increased investments in product development and market expansion, how do you plan to manage liquidity? And are there any considerations for raising additional capital?
No, sir, this is Zulfikar Kamal. So as we have mentioned in the earlier call, the expansion has been completed by taking additional borrowing, and we have sufficient gearing as mentioned in our report. We are storing at around 40% of the gearing ratio. So there is no any plans for further liquidation, infusion of equity capital or any liquidation of our share.
Okay. Thank you, sir. And so one last question from my side. Could you provide more details on your licensing agreements and whether there are plans to expand these alliances to drive non-linear revenue growth? Non-linear revenue growth.
Yeah. So as mentioned by Dr. Daud, we have already registering our NIP product and registration across Europe and other developing countries. We are completing our NIP product, 10 NIP product, these equivalent and dosage completion will be completed by this year end. So after completion, by next year, we will be able to get the results of the same. For increase in revenue will start from around next year onwards.
Okay. Thank you so much, sir.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, good afternoon, everybody. So, sir, my first question was, of the 92 crores that we've done in this quarter, what is the revenue from regulated markets?
Very specific question, but as you have mentioned, the regulated market revenue is on the growth. we are giving the total percentage of NIP and OTF towards the total sales, which is, as mentioned by Dr. Daud, is on the growing trend.
To be more specific, see the actual revenue from the regulated market business is less because there are limited MAs as of this moment, and they were received in the last 2 years. So there are a few more submissions which are on the last stages, and once we have a portfolio of products in MA, and after the 6 or 7 months of receiving the MA, that is when the business starts. So the guidance which we have given earlier also is for 25-26, when you will start seeing the non-linear growth or any other technical term you might like to use. That's when the results of all these NIP products filing in the regulated markets will start coming. Although in the emerging markets we do have registration and we have started, that's what we are reporting, that for these same NIP products, in the emerging markets, there has been a substantial traction, and we continue to see growth in our NIP and ODS products.
Right, sir. Right. So, sir, in terms of, for this year, FY25, any sense on what kind of growth you're looking over FY24 in terms of revenues?
Yeah, so we are looking at around 10% growth over the last year for the March 25 ending.
Got it, sir. So, just on the last part of your explanation that you said that 26 you will start seeing better growth. So, from a profitability standpoint, sir, that should also, that would also be the, relevant for profitability as well, in terms of the numbers?
Definitely, we are looking, and it will definitely impact on the profitability because the European sales and the NIP and ODS will have a higher margin, and we are already giving a guidance of around 14 to 15% growth in EBITDA, plus slight increase in the margin over the last year.
So this you are saying for FY25?
FY25 and going forward further.
Okay, so this year you're saying margin will grow faster than revenue, and next year revenue will also grow faster and margin will also expand, right?
Yeah, that is the plan, and we are trying.
Okay, so sir, today in terms of our NIP registrations, how many of them as of Q2 FY25, how many of them are in EU?
So yeah, hi Rohit, this is Zaid. So what we have done is we had started with an initial line of about 10 NIP which were under development and towards which costs are going. So out of those, we have developed about 6, and these have all been filed now. The latest filing that we did, so EU has been, let's say, about 6 to 7 products filed. The number of filings are more because each product is filed in multiple countries or different strengths. So there are multiple filings on this, but the core products are 6 to 7. And we are also extending these to other regulated markets like Australia, etc. So today, let's say about 6 products. Going forward, the other 4 products also we are planning to complete, and the investment is towards that. Once they are also complete, we'll target the filings either in Q4 or Q1.
Next year.
Yeah, next year Q1 FY26 or Q4 we'll complete the filing of our initial 10 NIP products which we had started development.
So again, just one clarification. So in the presentation you mentioned we filed 14 NIP filings and 6 OTF filings in H1 FY25.
Yeah.
And I remember, I have it in my notes that we have about in FY24 we had filed 5 NIP registrations in EU, and in Q1 it was 2. So we have total. So you still so in Q2 we have not additionally filed any new NIP in EU. Is that understanding correct?
No. So in Q2 we have filed 1, the gastrointestinal NIP through DCP filing. So basically what we try to do is in the presentation kind of keep investors updated on the initial 10. So last year's presentation, the 5 number is the count of products which had been developed and filed. In Q1 this year we did one more, and Q2 one more. So about 7 today, let's say, NIP are filed, 7 products. Now the number of filings, like you said, the 14 NIP, that is mix of EU and far emerging markets also in there. If you just look at EU, the number is, like I told you, the number of products are 2 and filings are 7, because each product is filed in multiple countries. So each product in a country is considered as one filing. So let's say if I file the same product in 4 countries, that's 4 filings. So in EU, we have done 2 products and I think 7 filings in total. The remaining filings are for the far emerging and ROW markets. So these are also being done simultaneously, and the kind of revenue you are seeing in NIP right now without regulated markets is coming as an effect of these filings which I've been doing.
Right. Got it. And so this last question before I join back in the queue. So if you look at last probably 12 quarters, I mean, H1 is slower. I mean, Q1 is usually slow, and then Q2 slightly picks up, and then H2 is better in terms of revenue contribution. So just wanted to understand, is there some kind of seasonality in the business? Usually pharma companies don't necessarily have that. So just wanted to understand that part. So if you can just explain.
Yeah, that's been the traditional trajectory for Zim with the kind of business it has. As we go into the regulated markets, probably that could change a little bit. But we have traditionally had the H2 numbers are about 55 to 60% of the H1 number. So it's an effect of the kind of business and product mix that we have. We have a domestic business, which is institutional business largely. That also is kind of now getting mixed up with the domestic out licensing business that we have. So slowly that is kind of smoothing out. And then there are the far emerging and ROW businesses where import permissions by our customers are received from January onwards. So it's the planning of those in the last 2 quarters by the clients, which might have affected with our base. Over a period of time, we would actually be expecting evening out of business in all the 4 quarters, because the company's product mix and its nature of business is also changing.
Got it, sir. I'll join back in the queue. I have a few more questions, but I'll join back. Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Shyam Garg from Laboratories Family Office. Please go ahead.
Thanks for the opportunity. So my first question is, what is the capacity? My first question is, what are your sales projections for the recently authorized erythromycin oral suspension in the EU over the next fiscal year?
That we are not at liberty to disclose, because we signed the agreement, which are the agreement that we were allowed to put on in public domain have already been put there. The ones that have, we'll just sign those projections, and once we have clear specific projections from our clients, we'll be very happy to actually put it in the public domain on our website, and perhaps that would be the right time to ask them.
Okay. And so we are looking out for MA in EU for erythromycin oral suspension?
Sorry?
Are we looking out for any MAs for oral suspension, erythromycin oral suspension in EU?
Oh, yes. We will be doing multiple filing. And it's an NIP product because it's an old antibiotic. It's an NIP product because it stays marked. We are filing. They're making multiple filings.
And so what is the capacity utilization for Q2?
It could remain at sub 40 level. The reason being, in any pharma, the optimum or maximum is up to 60, and we will be at up to 40.
Okay. And how do you anticipate the revenue trajectory of your OTF segment, especially with the recent increase in contribution to 4.9% in Q2?
See, historically, our H1 to H2 is 45 or 42, 55, 60. So the trend will be followed.
No, he's asking about the ODS. Normally, our ODS business is seeing an interesting upsurge. We would like to reserve our remarks for the time being and wait this quarter because we have some interesting agreements and interesting orders to execute. We will be able to give you a much firmer view in the end of the next quarter.
Okay, sir. And so what are the competitive advantage of your OTF portfolio in the developed market, and how are you positioning this products against competitors?
Yeah. So, Shyam, I'll just take this. I think when it comes to the technology, the advantage comes from the fact that there are very few players already. Plus, when you add the filter of an EU accredited facility, the companies filter out more. So there are only a handful of companies in the world who are doing it at EU scale. So I think for us, we are looking at the regulatory aspect of it with a proper dose.
Ladies and gentlemen, please stay connected. The line for the management dropped. Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected.
Shyam, can you hear me? Sorry, I think it dropped automatically. So what I was saying is with the OTF, I think the advantage that we have is on the regulatory aspect that having a proper EU dossier ready to be registered is a big advantage for us. So I think in that sense, what we are aiming at is for having our product line be completely ready for EU with a proper dossier. And if we can do that, I think we'll have an advantage. When you talk about technology, there are some advantages to it, but these kind of advantages are often kind of what we've already spoke about, like having a film that is non-curving or having taste masking technology on the film. So being able to have a better taste of the film. These are the kind of advantages we get from having the patented technology and process.
So, as an interesting aside, we have already, shared the news of a submission of a sublingual oral film. So, and we are awaiting that's in the final stages. So, besides the oral dispersible film, the technology is also versatile enough to make sublingual film, which are, where the product gets absorbed under the tongue directly into the bloodstream. So perhaps that's a kind of a rare space, and that would actually show the company's the strength in the company's technology and open the doors to other products which can use this kind of versatility or which can show this kind of application. So once this product is in the market after the NA, which we hopefully expect to receive soon, perhaps that would open many doors for Zim Laboratories and the different products that it has under the sublingual absorption stage.
Okay, sir. So after the filing of this dossier and approval, you would be the sole seller of this formulations or OTF products, or there will be other competitors as well who can participate in?
I didn't get your question.
After filing of this OTF portfolio approvals, we have received approvals for this OTF portfolio. we will be the sole seller of these products, or there will be other participants as well?
Yeah, I think so for this opioid product that we are specifically talking about, in Europe, currently there is only the innovator. There is no generic, but maybe for other products, yes, there may be one or two players more who are there, let's say for sildenafil, etc. But for this opioid product, currently there is no other generic as much as we know, there is no generic.
Okay. Thank you for answering my question. I'll join back in queue.
Sure.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from line of Dipesh Sancheti from Manya Financial. Please go ahead.
Yeah, am I audible?
Yes, you are.
Okay. Based on the current visibility, what is your revenue and EBITDA guidance for H2 to 25?
Yeah, as I mentioned earlier, we are looking at a top line revenue of 10%. We are giving guidance. Overall guidance.
Similar margins?
And EBITDA margin and all, we are looking at around 14%.
14%. And what are going to be the key catalysts that would drive the growth over the next 3 to 5 years, particularly in terms of product pipeline, market expansion, and operational efficiency?
Yeah, today, in fact, if you see the EBITDA comes after the expenses have been factored in, the expenses are being made for regulatory filing, expenses are being made for expansion, and people have been recruited to actually cater to the kind of the growth which we expect from these businesses to come in, although agreements have been signed as yet. So once the business grows, the expenses are already there inside the balance sheet. So once the business grows, we will see better margins, everything else will improve because expenses are actually being done today. People are being trained for the market where we wish to enter, where we are filing, where we are from where we expect to obtain our MAs and our partners expect to their MAs. Once these MAs start trickling in, the story will be a little different in terms of the overall business growth, the overall margins that the product have. That's all. That's what we've been talking about. That's the story.
I just want to know, in the next 3 to 5 years, will our ROE be double digit? Will our sales growth be double digit? And will our margins be increasing to more than 15%? Is that what we should expect?
Well, the double-digit part is like we as a company we don't believe in giving a specific number, but the second part of your expectation is right. All these metrics, all these metrics are going to gradually improve, and in 3 to 5 years you'll see improvement in all areas, including EBITDA, PAT. Overall growth, NIP business, that's the whole
the plan and that's the plan.
Okay. And what are the major regulatory challenges you foresee when you increase your filings and commercialization in EU? And how are you mitigating these potential compliance risks?
Well, we are certainly mitigating them through the right choice of the right partner. Whoever we sign agreements with, we also have our own, we have kept reserved the business for us as well. Most of these agreements are not, in fact, almost all the agreements are not exclusive. There is a scope for them also to play in the same market. That's number one. Number two, the partners with whom these agreements are being signed are partners who are, number one, active in these therapy areas. Also, they are large enough and they don't sign agreements without going through the due diligence of the dossier which they are buying, and without understanding that these dossiers are fileable and MA obtainable. So that's an indirect way of overcoming the potential regulatory challenges, having strong partners with you who believe in the product and the dossier and who or legal issues that can always come up. But these are partners who would be able to actually address those issues as well. So it's a mix of prudence as well as going with the right partner.
So are there any ongoing discussions of strategic partnership, particularly in the developed markets, to accelerate product commercialization?
Yes. All the partnerships are strategic. None of them is opportunistic. For each product, we have chosen a partner who is strong in that therapy area and who is strong in his own market, who understands the market well. And these partners have, because if you see for them, and for most people in the regulated market, clients in the regulated market, Zim is a new entrant. So there has been a rigorous due diligence on all the dossiers, the facilities, the kind of skills and competence that Zim brings into the whole business, the people who are behind these products. So there has been a rigorous due diligence of all these issues and areas which you guys as financial analysts want to ask us by these partners, and that's how the agreements have been signed. And the out-licensing fees are being received in a line and in tune with the agreements that have been signed. So there are people who are putting their money where their mouth is, in a way. I hope that answers somehow.
And are you experiencing any input pressures due to macroeconomic factors? What are the measures which you are taking for the hedging against any cost fluctuations or supply chain restrictions? Hello?
I don't think we have spoken about some of our markets where we are operating. There are one or two products where the cost, the price changes have been there, one or two, not many, but as we are in that happy position of being able to pass on our costs, and most of our agreements talk about that. Being able to pass on the raw material increased costs to our clients. I don't foresee problems due to this reason. Certainly there are problems due to the currency-related problems which are easing and which haven't eased to the extent that we thought they would ease because of the geopolitical situation, unfortunately, existing now.
Okay. And how do you see the debt situation improving in the next 3 to 5 years? What are we doing about it? Any particular plans for us?
At the moment, whatever debt we have taken, that is towards specific to the capex. Once that capex is in operation, we will get revenue from that, and that position will remain healthy.
So we are planning to repair it by our internal accruals only. We are not planning any fundraising or anything to actually reduce the debt dependence.
Not at the moment. There are different triggers for fundraising, as you know. Maybe enter a totally new, highly regulated territory, for example, or some sudden influx of business where we feel that it is in the interest of the company and its shareholders. That is the time, but as of the near future, we don't have any.
What is the cost of debt, if I may ask?
It depends on the bank to bank.
Yeah, but you can give an average.
Yeah.
What is the average cost of debt?
Around 10 to 10.25.
10 to 10.25%. The reason I'm asking is that we are generating an ROE below 10%. And if the cost of debt is high, I hope we won't fall into a debt trap. That's the only concern which I have.
No, as of now, we don't foresee anything. We are sufficiently, there is a good coverage. As we mentioned earlier, the gearing is around 40%. We are only taking the debt of the total network. So, and our total debt is not exceeding around 2 times of the EBITDA. So we are planning that we don't enter into any trap. The risk committee and all have proper monitoring is going on.
So how much of the debt is term loan and working capital? If you can just bifurcate that for me.
Yeah, around the total debt of around 90 crore, around 60% is on the working capital and around 30% is on the utilized.
Okay, and the utilization of working capital has been 100%?
Yeah, it is very less. As of now, the utilization is around 60 to 70% of the sanction.
Okay, great. Thank you so much.
Thank you very much. Participants, you may press star and one to ask a question. Next question is from the line of Aman Jain from Arihant Capital. Please go ahead. Aman, may I request you to unmute your line and go ahead with your question, please?
Yeah. Hello.
Yes, you're audible. Go ahead.
Yeah, am I audible? Yeah. Yeah, thank you, sir, for the opportunity. So just wanted to understand if you could describe the key markets that are driving the export contribution, which has increased from about 79% to 84% in this H1FY25. So what are the key markets that are driving this growth? And if you could also give us the strategy that we have planned to penetrate the untapped regions.
Well, the registrations in the ROW and emerging markets of new products have been coming in. This strategy is about 3 or 4 years old. But now all the filings that we had done previously, which we have reported from quarter to quarter. So those registrations are coming in. They are helping us in changing the product mix. The products with better margins are coming in. The sales of these products are taking place. That's very, those are all on expected lines. This is the kind of guidance we've been giving all the time from quarter to quarter. And it's in line with what the commitments we have made.
Okay, understood, sir. Sir, just a question on the R&D spend. So it has increased from about 8.7% to 9.7% in this half. So if you could tell us what is the allocation for NIPs, OTS and other dossier upgrades?
I think I understand the question and the kind of data you need, but see, it's very difficult to segregate it product-wise because what happens is a lot of common facilities being used. Everything is in the same plant. What we can tell you is the cost of B that we've capitalized, about 65 million rupees. In that, majorly the B cost is towards the NIP. That much I can tell you.
Okay, sir. And so just one last question. So what are the priority markets for the new NIP filings that we have planned, and what is the expected timeline for the approvals? And if you could also give us what is the potential revenue contribution from them?
So I think the first part I'll answer. The key markets we are focusing on is now the developed markets, except US and Japan currently, because our plant is EU ready. We are also ready to go into Australia, Mexico, some other developed markets like South Africa. The timeline usually is about 18 months from filing for the MA, because there are a lot of queries that come from the ministries. There are delays on that end also. So let's say an approximate timeline of 18 to 24 months after filing is when we should expect the MA. And in terms of revenue projections, I think right now it will be a bit too early for us to give that number. What we are going to do is as soon as these MAs get commercialized, we'll keep updating you that this MA has commercialized in a particular region, so that will help you track.
Understood. Thank you so much.
Thank you. Next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Hello.
Go ahead, sir. You're audible.
Yeah, namaskar, sir. Sir, firstly, sir, if you could explain to us the capital work in progress closing balance of 33 crores, when is this going to get capitalized, and what kind of increase in turnover or asset to turnover ratio we can expect?
Yeah. So the CWIP, what we have mentioned, the projects as we have already said earlier, the project will be completed by year-end, and we hope to capitalize most of the CWIP in the March 25. And the asset turnover ratio, definitely, as we have already in the previous call, these are specialized suits for the NIP products. So once the MA is received, these assets will be commercialized and the assets will start generating revenue from this.
Sir, but if you could give us some color, what kind of revenue will it it generating in future, sir?
Yeah. So it all depends on the agreement which we have signed earlier on the NIP products, and we are awaiting the MA registration from the same. So these MAs will totally, the revenue will depend on our marketing partner. And normally we expect the revenue to start, as we mentioned, in the first quarter of 25. And we have projected quite a good amount from these products. Our expectation is pretty good. And we have already given some guidance on the overall agreement which we have done, the MA product, MA file. So definitely the CapEx 2 times, so we are expecting.
I just to place on record, when you have a capex in a pharmaceutical company, it takes about 1.5 years to 2 years for the capex to complete and the facility to be qualified. And because we are signing these agreements and we have the committed, we have the guaranteed projections in most of our agreements, we are building capacities to be able to take care of 100% of whatever has been committed by us for sales, the quantities which we have committed to sell or supply to our partners, and the partners have committed to take. So it won't be, we won't start getting the return on investment from day one of having completed this facility. These facilities are likely to be filled in the next 2-3 years. However, these products are the NIP high margin products and have generated a lot of traction and interest among different clients and partners. And in fact, in the next few quarters, one specific thing I can say is that these partners would also start filing the dossiers. So, if possible, we'll try to bring that news also to the public domain as much as we can, so that can also be tracked.
Right, sir. And sir, if we also look at the intangible assets under development, that has a closing balance of 25 crore and other intangible assets of 3 crore. So can you explain the nature of these intangible assets which are under development, and what should one read into this?
Yeah. So as we have mentioned earlier in earlier calls, we are capitalizing our R&D expenditure of BE studies and product registration. These are forming the part of the intangible assets. So all filings which have for which the bioequivalent studies, the product which has been developed and the products are being registered are being debited in this WIP of intangible assets. Once the product registration is received, that is the MA is received, then we capitalize it, and after capitalization in 3 years they are amortized. So these 33 crore represents the products which have been developed. These studies have been incurred on these various products of NIP and oral penicillin, and the filing which has been done, the filing fees as mentioned in the earlier call, the DCP filing of all over Europe as well as specific filing which are being done, these are capitalized under CWIP of intangible.
So sir, currently the expenses relating to R&D are not going through the P&L.
No, the regular expenses of the R&D is going to the P&L. Only the 2 expenses which I mentioned earlier, the bioequivalent studies and the filing fees are not going to the P&L.
And just how much are we spending on the ethical marketing part of the for the drugs for which we have filed the dossier? What are we spending on the marketing front?
Marketing is yet to start. Once the MA is received, as Dr. Daud mentioned, then the marketing will start. On an average, we have got our marketing as of date, ROW and other emerging marketing team there. Other marketing, I think
the regulated market is being looked after by the regulatory marketing head. As a big part of this business is in Europe and it's a B2B play, We are not in the market on our own with our distributors as yet. So we use the normal marketing tools like meeting our clients at our level, and regulatory related discussions are being held. I don't think it requires a marketing budget, because the directors are involved in the marketing and the negotiation and out licensing of various products. That's number one. We do have plans to strengthen our marketing for emerging markets and ROW markets for sure, and some very interesting regulated markets. For which we have recruited we have strengthened the team. We are in the process, and we have made some efforts this year. So, where we intend to have our own brands in the market, and appoint our own distributors and be there with our own product. So that's why I said in the beginning, the strategy is to sign, even in Europe, agreements where they are not exclusively, the dossiers or the product is not being exclusively uploaded to any partner. We have retained the right to be in the market and at a later date by ourselves as well. I hope.
Right. Yeah. Yes, sir. I will rehear what you said. Did not get it completely. Sir, can you give us what is our current rating as of now, and what are our current maturities for this year? We have, I think, so 40 crore of debt, long-term debt.
No, we are rated with care and equity. It is a BBB stable.
Okay. And what is our current maturity for this year? How much? What part of the loan is repayable?
See, normally the 15 to 16, 18 crore has been matured every year, or the repaid. The capital repayment is there.
Okay. We have closing balance of 40 crore under non-current liability. So, as of 30th September, how much is repayable for the second half, H2?
See, the term loan part, we have taken some additional loans. On that part has been disbursed. Another part will be yet to be disbursed. And apart from that, certain sections are in moratorium. See, but in a summary form, normally we pay to the banker, repay to the extent of 15 to 18 crores annually.
Okay. And last question, sir, when we see, it is good that our revenues have grown year on year as well as quarter on quarter. But commensurate to that, our other expenses, employee costs, and the finance cost, everything has moved up. Thereby, our PBT has remained lower if we take the year-on-year numbers. So, what explains this lower PBT for September 23 and September 24?
Yeah. So, as mentioned earlier by our MD, Dr. Daud, all our expenses related to product development, the capacity building, to taking process validation batches in the facility, validation of the facility, all these expenditures are now being debited. So this is, and we have got everything ready. Our regulated team is in place for the European market and the regulated market. So these expenditures are already being done along with the capex and the filing. So all these three expenses go hand in hand. Unless and until we complete the whole circle of filing, till that we have to spend on expenditure, and we have completed all of that. Similarly, interest cost is increased because of the term loan and completion of the new facility, which is under construction and will be completed by March end. So all these has an impact on the overall increase in expenditure. But the good part is the overall operational expenses has remained constant, stabilized. But these increase of expenses, which have the revenue for which will be realizing in the coming year, the expenditure already been incurred this year.
Great. And last point before I join the queue, sir, you mentioned that H2 will be bigger than H1, and the proportionate will be the first half is 40% and the second half is 60%.
Yeah, just to correct you, we mentioned that traditionally the company has 55% or 60% of the business in the second half. We've just given you something which is it's a guidance. This is what the company has normally done. I also said that as the company's regulated market business and the different products that it is introducing actually start yielding return, we expect that this kind of staggering would actually level out in the long run or in the medium run.
Correct. And for the profitability part, sir, are we confident we will be able to match or grow higher than last year's reported numbers?
Yes, we are. I mean, if we were not confident, we wouldn't have done it.
Come again, sir. I missed your last point.
If we were not confident, we wouldn't have done it. We are confident that we have the products. Those are, there have been filings, and our confidence has increased because we have several agreements now from very well-established players in Europe who have done due diligence on the dossiers, the facilities, the people, and the intellectual property that we have, on the basis of which they have signed agreements and given initial or the second milestone out-licensing fees to us. And that you can check, if you see the out-licensing fees and the increase of those, the share of the out-licensing fee coming inside the company. So there is an indirect validation of our confidence as well.
Okay. Thank you, sir. If I have anything for follow-up, I will join this. Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. Next follow-up question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, thank you for giving me an opportunity again. Sir, so one clarification I wanted. So you said this year 10% growth and EBITDA, you said 14%. This is the margin you're saying, or this is the growth on top of last year? Just wanted to be clear.
So I think, Rohit, what we are thinking is last year EBITDA was about 46 crores. So this year, if we do the 10% revenue guidance, let's say around 400 crores if we do, I think the EBITDA will increase about 10 to 15% over the last year also. And then margin will also come around, I think 14% or so. EBITDA margin would be 14% or so if we can do the revenue number, 10% revenue growth.
This you are saying including the other income, or this is without the other income?
Without other income, this is only the total core revenue.
Total
Revenue with licensing fee.
Yes. This is the total income, so this will also include your other income, right?
Yeah. Include the other income.
Oh, okay. So that was one, sir. And sir, Mr. Anwar Daud, you had mentioned that, sir, sir, we have introduced we have filed a lot of registrations, filings for our products in the challenging markets as well as unregulated markets also. So, sir, in the last maybe 12 months or maybe 12, 18 months, have you seen any change in your product mix, any newer products sort of contributing a lot? And if you can call out anything on that part, that will be really useful.
Yes. So we have given you, I actually earlier spoke about our NIP and OTF segment, including licensing fees, collectively contributing 21.6% of total revenue in H1, financial year 25, which is up from 14% in H1 24. So you can see the whole thing creeping upwards all the time. And if you see the last 8 or 9 quarters, you'll see that effect as well. That as the registrations are coming in, there's a traction from this kind of business, and it's impacting the overall performance of the company as well.
Right. So in H1, what was our income from the MA licensing income that you would have had?
Yeah, we had, let's say in H1 combined, we had about 1.5 to 2 crores of licensing income.
Okay.
from NIP plus OTF. I think, sorry, I'm mistaken, it's about 3 crores of licensing fees, OTF plus NIP combined. Second half, we are expecting a little bit more to come in because some milestones are coming up.
So sorry, then. So you said 3 crores in H1, and you are expecting it to increase in H2, right?
Yeah, expecting it to increase in H2.
And sorry, just one more question on this. So, this income that we report or record, is it where is it recorded? Is it in sales, or is it in, like, our operating sales, or is it part of other income?
Other operating income.
So actually, how we are reporting it, Rohit, is we report a total operating income. That is the core revenue, which is basically revenue from operations, that is the sale income, and then other operating income. The other operating income is the licensing fees and some export incentives. Then there is the other income, which is effect of currency, etc., which is outside the core revenue, and then that combines to become the total income. So I think the number you will see in the financials that are uploaded, if you see, there are two heads, which is revenue from operations and other income. So the revenue from operations has the licensing fees and sale both inside. Other income is effect of, I think, currency, etc.
Got it. Okay, understood. Okay. And sir, any comments on some of the promising NIPs that you had talked about in the last few con calls, whether it is pancreatin or...
At the last stages of submission, hopefully we are expecting some good results in the coming 2 quarters.
Sorry, sir, can you repeat that point? The name of the product, I didn't hear that.
One NIP and one oral film are very interesting from the point of view of the large market size and expected contribution to Zim's revenue as well as profitability, and they are in the final stages. So we are expecting some good news in the next 2 quarters because they are in the final stages of the submission.
Okay. And sir, just one question in terms of this con call. So we are following a cadence of half yearly, or will we do it quarterly? Just wanted to understand that.
So I think, Rohit, this year, the first quarter, we decided to have a plant visit. We are targeting half yearly calls because I think at this point we are still in the phase of getting our MAs and it's a waiting period as such. So we are thinking that right now half yearly would be best. I think from next year, if we think that there is more information to be given, then quarterly is what we will start again.
Sure. Thank you so much. All the very best for the coming year.
Thank you.
Thank you very much. As there are no further questions, I'll now hand the conference over to the management for closing comments.
Thank you. We'll try to address all your queries. If you have any remaining questions, please feel free to reach out to our investor relations agent, Go India Advisor, or our investor relations in charge, Zain Dawud. Both will be happy to assist you. And thank you once again, and have a great day ahead. Thanks.
Thank you very much. On behalf of Zim Laboratories Limited and Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.